think Bitcoin's going to hit a numerically interesting number. Now, obviously, I've put $1 million Bitcoin out there. I hope it hits $1 million, but maybe it's like 666,000 or 500,000 or 250,000 or some round number that the human mind is significant for some arbitrary reason. We're going to hit that level, and then we're going to expect insane things out of the pace of fiat money creation. And at that point, it's probably time to sell everything. Now, I don't know where everything else is going to be. Solana, ETH, random fucking shitcoin in your portfolio. I don't think you should really trade based on a particular price target. It's more, how do you think the expectation of what fiat liquidity growth has to happen to justify this price versus the reality of what's going on and what the politicians and the central bankers are actually saying.
Renowned cryptocurrency and financial expert Arthur Hayes has long been a keen watcher of global liquidity patterns. His understanding of the larger economy has frequently allowed him to identify pivotal points at which changes in monetary policy are reflected in the behavior of financial markets. Following the epidemic, central banks poured liquidity into the markets, which paved the way for riskier assets like Bitcoin to soar. However, Hayes has cautioned that the viability of both traditional and digital markets is seriously threatened by the enormous amounts of government debt combined with inflationary pressures. We'll go into great detail today on Hayes' thoughts on the state of the economy, inflation, Bitcoin, and the evolving role of central banks. Hayes has been consistent in emphasizing the dangers and benefits associated with government market interventions, with a focus on global liquidity. His opinions on the potential of Bitcoin continue to be a lighthouse for many investors searching for alternative assets in a world where financial uncertainty is becoming more and more prevalent. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you and enjoy the video.
I think Bitcoin's going to hit a numerically interesting number. Now, obviously, I've put $1 million Bitcoin out there. I hope it hits $1 million, but maybe it's like 666,000 or 500,000 or 250,000 or some round number that the human mind is significant for some arbitrary reason.
Yeah,
we're going to hit that level. And then we're going to expect insane things out of the pace of fiat money creation. And at that point, it's probably time to sell everything. Now, I don't know where everything else is going to be. Solana, ETH, random fucking shitcoin in your portfolio. I don't think you should really trade based on a particular price target. It's more, how do you think the expectation of what fiat liquidity growth has to happen to justify this price versus the reality of what's going on and what the politicians and the central bankers are actually saying, right? Because in November of 2021, everybody thought the moon, we're just going to keep printing money and blah, blah, blah. And then, Powell said, hey, we're going to start tightening money. I think it's at the December meeting, we're going to start raising interest rates in March. And essentially around that time was the peak of the market, right? So I don't think it's a number we should have in mind. It's, do the central bankers and the politicians think that they've gone too far in this sort of fiscal expansion, money creation? And when that zeitgeist changes in sort of the TradFi markets, we have to be cognizant of that. And then regardless of where the price is, it doesn't matter what the nominal level is of the things in your portfolio, you have to get into safety because it doesn't really matter at that point. So I think, post the Trump victory, Bitcoin obviously had a stellar rise from 70 to 110,000. People expected all these great things. And I think a lot of it is, we're going to have all this money printing and all these sorts of things are going to happen. And I think the pace of credit creation disappointed expectations. And that's why we had this pullback from 110,000 to, we got to a low of like 76,000 last 2 weeks, whenever it was.
Yep.
And I just put out a tweet earlier today. I've been doing some analysis over the weekend and listening to various folks. I think, obviously the United States is the most important barometer of credit creation globally. Everyone else sort of reacts to what's happening in the US. Yep. And I think there's a seminal change in the tone of Powell at the last Fed board meeting where, prior to this, he was pretty antagonistic towards Trump. I'm staying, I'm independent, inflation, we're going to fight it. Don't fucking talk to me about interest rates. I can do my own thing, right? I'm here to solve inflation. Shut the fuck up, Trump. Like, I don't care about your policy goals. Then in this press conference is a complete change of tone. Number one, they are going to decrease the pace of quantitative tightening, meaning they're going to let less treasury securities roll off their balance sheet, which is a bit curious because number one, inflation is still above their target. So core PCE is the inflation targeting I think it's a bullshit metric, but whatever. It's the one that they look at. It's above 2%. Stocks are at all-time highs. Maybe they're 4 or 5% off the all-time high, but still all-time highs. Unemployment, all-time lows. Real GDP growth, stellar in the United States. And the balance sheet is up over $3 trillion from COVID. And the whole point was, let's remove this credit from the system to stifle inflation to help the average American. And yet at this press conference, when the American economy is on, in all sort of ways you can look at it, doing very well, saying, I need to reduce the pace of removing the thing from the system that's caused all this harm to the average American. That's a bit strange. And then he went on to say, we think that possibly we could allow our mortgage-backed security runoff, which is about $35 billion a month, to be negated by buying $35 billion a month of treasuries in the near future, right? So that's, MBS, QT, U.S. Treasury quantitative easing, because you're effectively buying treasuries with printed money as crypto investors. If Trump does 50% or he does 2%, it doesn't fucking matter, because we know that Powell's going to continue to provide the monetary conditions, the easy monetary conditions that we need to have our portfolios go up in value in fiat dollar terms. So those three things, as I sort of thought about it and listened to some other commentators, made me extremely bullish on the new trajectory of crypto. And I think that on balance, we probably hit a bottom of 76,000. Does that mean that we're not going to retest it? No, of course not. But if I had to make a bet, I would bet that we go higher rather than lower.
April has historically been a difficult month for markets, mostly because of the U.S. tax season. When people and organizations sell assets to pay their taxes, it frequently results in a lack of liquidity. In addition, short-term liquidity may be significantly impacted by the U.S. Treasury's management of the debt ceiling and checking account balance. According to Arthur Hayes, Jerome Powell, the chairman of the Federal Reserve, and Treasury Secretary Janet Yellen might collaborate to control liquidity conditions. They could contribute to the maintenance of more stable market conditions by changing the Treasury's cash balance management. Bitcoin and other risky assets may benefit from a favorable liquidity effect if the Treasury maintains a low checking account balance and instead borrows from the Fed. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
I think M2 is such a convoluted measure because it's defined differently in every single different country, and reported differently. And so I try to keep things as simple as possible and track the least amount of variables. And so right now, all I'm looking at is the United States, China, Japan, and Europe, and so EU. And that's all I care about. And obviously, there's a lot of other central banks and countries out there in the world, but those are the four major ones. And I track bank credit, so how much credit is being emitted by the banking system. That's somewhat difficult in a lot of jurisdictions because of how infrequent the data is published. And I also track central bank balance sheets. And usually most central banks report that on a weekly basis. And what are they saying about what their plans are for the future and how they're going to change whether the price of money, the interest rate, or the quantity of money, quantitative easing, money printing, all those sorts of things. And so that's kind of what I look at. So I think that the 4-year Bitcoin halving cycle and sort of the minor profitability and how that swings over time made a lot more sense in terms of a market cycle when Bitcoin was a much smaller asset class, and I guess in crypto in general, because if Bitcoin goes, everything else follows. But now that Bitcoin and crypto are a bona fide asset class, they're talked about in every major financial network in the world. Every central bank has an opinion on it, whether it's good or whether it's bad. You have the leader of the empire of the US talking about Bitcoin and policies, and everybody's responding with that sort of stuff. So now I think Bitcoin has transitioned from this sort of technological digital bear asset into the best smoke alarm for fiat liquidity that we have globally. Previously, that role was held by gold. Gold and Bitcoin have some different properties that make them react a little bit differently to things. And now I think we have a 24/7 market. Anyone with an internet connection can access it. And it's really just driven on fiat liquidity. So as I've broken it down in my essays before, I break down Bitcoin's price value as, on one hand, it's technology. On the other hand, it's fiat liquidity. And so in the beginning of Bitcoin, there's a lot more technological change as sort of the ecosystem was building and sort of technological developments were much more rapid. These days, the amount of changes that happens at Bitcoin core is quite small, and obviously it takes a long time for the community to coalesce around how they want to change things. So the technology piece is pretty standard. There's a number of wallets that are getting added to the network at some rate over time. It's not anything magical or crazy. And so you can kind of forget about the technology piece. It works. And so whatever. It's really about fiat liquidity. How many dollars, euros, yen, yuan are being created and destroyed? And that's going to make its way into what we think the price of Bitcoin should be right now and into the near future. And so that's why I focus entirely on liquidity. All I care about is fiat liquidity. And yes, the stock market and Bitcoin can move, in tandem or not in tandem because of these conditions, but stocks have other things that decide the value, specific companies, earnings multiples, all these other things, right? Bitcoin, we have none of that. As long as we believe it works, then it just comes down to how many fiat things are in the denominator, and then you just get to the price. And so that's why I spend all my time looking at liquidity, and that's all I care about. And so if it's a 4-year cycle, it's a 4-year cycle. And if it's not, it's not.
According to Arthur Hayes, as the asset class has developed, so too have the market cycles and value of Bitcoin. Bitcoin's early development and innovation were primarily fueled by technological breakthroughs. Yet Hayes notes that the significance of Bitcoin and the cryptocurrency industry as a whole has grown as they have established themselves as respectable financial assets. The current state of the economy has a greater influence on Bitcoin's price than technological advancements. Hayes divides it into two main components: fiat liquidity and technology. Although Bitcoin's technology is getting better bit by bit, liquidity, the quantity of dollars, euros, yen, or yuan that central banks generate or destroy, is what really drives its price. He goes on to say that the amount of fiat money in circulation determines the price of Bitcoin rather than stock-related factors like earnings releases or company valuations. By observing their balance sheets and bank loan activities, Hayes focuses on monitoring liquidity from the main central banks, the US, China, Japan, and the EU. These are the main determinants of Bitcoin's price. According to Hayes, the Federal Reserve Chairman Jerome Powell and Treasury Secretary Janet Yellen may decide to strategically maintain the Treasury's account balance low. This approach might improve liquidity and help riskier assets like Bitcoin by encouraging the Fed to borrow more money rather than keeping a sizable cash reserve. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.